What's up, guys? Jose here. So the quarterly US IPO activity in Q1 of 2022 dropped by 80% from the same quarter last year. What's going on? With fears of the pending recession, investors do not want to put their money into risky assets. And IPOs, guys, are considered long-term risky assets by some investors. Now, last year, they didn't care if companies were making money or not. This year, the stimulus checks has run dry, right? And they want to see companies that are making money. Well, good luck with that. Part of the reason, and I would say 90% of the time, part of the reason the companies go public is because they need to raise capital, right? Because they're not profitable and they're looking to expand. If you're waiting for a company that makes money before you invest in any IPO, you're going to be waiting for a while, my friend. There are some exceptions, of course. I believe Mobileye did pretty well this year. Then again, Mobileye is just a spinoff from Intel, so this wasn't really a fresh IPO, okay? But it did pretty well. It came out around $26 and the prices held up pretty nicely. And according to Reuters, equity listing on the Nasdaq fell for about 80% this year as the appetite for new issues took a hit from extreme volatility in the stock market sparked by the Federal Reserve's war on inflation. Klarna, Instagram, and Stripe, they all changed their mind about going IPO this year. It's a shame because I really like these companies and I was very much looking forward to them. Will IPOs ever recover? Well, if the Fed continues to raise interest rates and driving the stock market down, then no. However, the Fed will pivot eventually, guys. They always do, right? So, and IPOs will return. So if you're here for IPOs, I will continue to cover them next year. However, I will be covering more finance-related topics outside of IPOs. So I say 50-50 will be a good balance for me. So if you're here just for IPOs, you can stay. If you're here for other things, finance-related, you can also stay. Click that like button and subscribe. And I will be bringing you a lot of new content next year. Now, let's look at a video from the Wall Street Journal, and I'm going to give you guys my thoughts about the IPO freeze of 2022. Are you an IPO nerd? Join my Patreon for extra perks and shoutouts. Also, learn how to create and promote your own brand with my marketing masterclass available now. Link in the description.
In 2021, the IPO pipeline was flowing with record volume. An IPO, or initial public offering, is the traditional way a company goes public by listing shares on a stock exchange. And last year, IPOs raised more money than ever.
One of the biggest IPOs since Alibaba.
The biggest IPO of 2021.
But by December, a broad sell-off in high-growth stocks led to 2/3 of those in the US trading below their IPO price. And now, the IPO pipeline is seemingly frozen.
We haven't seen this slow a year in terms of money raised since at least 2000.
First of all, what an unfortunate last name. Second of all, there has been some IPOs that perform well, but like I said, that's just the exception, not the rule.
That's because sky-high inflation, rising interest rates, and Russia's invasion of Ukraine have made the financial markets volatile and in turn made investors wary of risky assets like IPOs.
Everything that you could think of that would make launching an IPO unpalatable, it was happening.
And now, analysts are worried that if it doesn't turn around soon, the IPO freeze could carry over into the new year. So far this year, traditional IPOs have raised only around $7 billion. In a typical year, traditional IPOs would have raised around $38 billion by this time. And at this time last year, the number was closer to $120 billion.
Closer to $120 billion because, like I said, everyone had the stimmy money. And there was a big sentiment in the market. The interest rates were so low. They were at 0%. So there was cheap money to go around and cheap money to invest. And now that the Fed is hiking those rates again, now there's no more money to be more money to be invested. People are barely making ends meet, with all this inflation that's going on.
Several major companies, including 2 fintech giants, had anticipated going public in 2022 before the pipeline froze and their valuation shriveled up with it.
It was supposed to be the year of the fintech company. There were many in the pipeline ready to go. We have not seen them.
Klarna Bank AB was one of those highly anticipated IPOs, but instead of making a splashy debut, the Sweden-based company laid off hundreds of workers to cut costs and was forced to seek funding in private markets.
This is a trend that we are seeing, especially here in the U.S. with, I think it was Google, then it was Amazon, now Facebook laying off people that they overhired during the pandemic when everybody was at home, right? I blame the companies for this, not the employees, obviously. You know, everybody's just looking for work. But what you're going to start seeing, though, next year, guys, is unemployment is going to go up and inflation is going to come back down. And the Fed is going to pivot and the IPOs will return.
Its more than $45 billion valuation dropped by 85%, down to $6.7 billion. Klarna declined to comment on its IPO plans. Instacart also had to slash its valuation, in this case by around 70% to $13 billion. However, with its growing revenue, Instacart was among a few companies still hoping for some heat and the opportunity to go public this year.
There's a renewed focus on show that you can become profitable.
Show me the money!
If not right now, very soon.
But the company reeled back its ambitions in late October. In a memo to employees, Instacart's CEO said that tumultuous market conditions are making an IPO for the company highly unlikely in 2022. But one area that has broken through the ice this year is spin-offs. This is when a larger company separates one of its subsidiaries or branches into a separate public company. Intel's self-driving car unit Mobileye is one of those IPOs expected to come through. After purchasing the unit for around $15 billion, Intel was expecting a Mobileye valuation near $50 billion last year.
And then it goes on to talk about how the spin-offs are doing well, kind of like Mobileye and Porsche was also a spin-off, right? So spin-offs are doing well because they don't necessarily need to raise that much amount of money because their parent company like Intel and what's the other, Volkswagen, right? They already have money. So they don't need to generate all this type of, income during the IPO. But those companies are backed up by bigger companies and bigger money, and they actually do pretty well during the IPOs. So the spin-offs done well this year. Rivian, not so well, not so good. You're going to see at the end of the video that Rivian pretty much started the whole demise of IPOs this last year.
In 2020, 2021, you could go to market with a dream and a vision of how you were going to make money and how you were going to grow so fast. That isn't going to cut it in 2022 and 2023, or at least doesn't look like it will cut it.
The electric vehicle truck company Rivian is viewed as one of the last big IPOs before the market crashed. It scored a valuation so high that meant it was more valuable than Ford.
We're starting to see cracks in the U.S. economy. Remember, just a couple weeks after Rivian, that's when the stock market started really shifting and selling down a lot.
So I'm going to go ahead and blame Rivian for this. So let's see how the Rivian stock has performed this year. Not well, guys. Not well at all. Rivian is down 77% last year.
Rivian's stock price has since come down. The company was hit with a lawsuit for allegedly misleading investors about electric vehicle prices, and recently it recalled around 13,000 vehicles for loose fasteners. Historically, IPOs are viewed as one of the riskiest asset classes. Because you're investing in a brand new company, few have a history of profit.
There's Robinhood. You guys buy Robinhood? I bought a few shares of myself. I'm down big time on Robinhood. I still believe that the company could recover. The problem with Robinhood is they're trying to do so much. Every day I get a new message. Hey, this is available now. Lending and shares are available. Hey, new cash card is available. Hey, new this, new that. Robinhood is trying to do way too much, and it does everything mediocre.
Profits. However, a flowing IPO pipeline means companies are raising more money, which can lead to more hiring, investing in tech, and employees finally getting to cash in on their stock options. So what would it take to thaw the IPO pipeline?
Success begets success. So you just need to see a string of IPOs do well to encourage more companies to want to go public.
Well, there you go, guys. All we need to do is to make IPOs great again, right? That is going to be easier said than done. If you're waiting for companies to be profitable to go public, most of them don't have money or they're not profitable. They're trying to grow. These are growth companies trying to go into the stock market and trying to, receive funds to grow and expand their operations. So I'm hoping next year the Fed pivots. They lower interest rates. There'll be more incentive for companies to, get these loans and business loans and all that at a lower rate, and they continue expanding. That way, more companies will be, what's the word I'm looking for? Motivated to join the stock market, and IPOs can return. Right now, looking at the list of IPOs, I'm not really excited about IPOs at this time. That's why in the next year, I'm going to be doing 50-50. One video will be about an IPO that's coming out. Next video is going to be about just general financial education, right? Or not advice, but just, pretty much information. So anyway, guys, I just wanted to come out with a video and wish you guys a Merry Christmas and a Happy New Year. Make sure you drop a like, subscribe to the channel if you like this video. But more important than that, guys, make sure you guys take care of yourselves. And I'll see you soon.
I bring up the pain, Rick the mind. I make the market rain like acid rain. An investing channel you ever know, ya. I take your girl, your house, your money, and leave you broke, son.